Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today's May 16, 2019, and today is Thursday morning. So looking at the major economic events of the day, really just one event coming out later today at 5:15 South African time. Governor Poloz will be speaking out of Canada. Okay, there was a previous unemployment number coming out of Australia early this morning, 3 a.m. So I didn't put it up because it's already happened. However, you do want to know that it did happen and the markets are responding to it. Now, looking at the markets just in general, looking at the Forex symbols, really the dollar continues to strengthen across the major pairs, okay? Nothing has really changed in that. It's going in a directional move. It looks like it's downwards trending. We'll take a look at that in just a second. Now, the indices, Dow Jones continues its roller coaster ride, okay? I didn't have to change that. Up 150 points yesterday, okay? Trading about 25,600-ish level. We'll see what we can expect from later today. Now, looking at commodities, both oil and gold both trade a little bit higher, okay? Oil jumping about $2.50 yesterday, which is an important event. Now, we'll take a look at that as well. Lastly, looking at the cryptos, Bitcoin bounces off support at 8,000, which is really important because that was a Fibonacci retracement level. But let's take a look at the markets and see what we could expect from today's trading. So we're jumping into the GBP/USD, as you can see here on a 4-hour chart. Now, what the problem is yesterday, we mentioned this yesterday, that it looked like it was downwards trending, as you can see here, and finally breaking this trend line, okay? This was previously resistance level, subsequent support trend line, okay? And it broke it. So we're trading at 128.42-ish level, and really the dollar getting stronger versus the major pairs. This is one of the major pair that it's getting stronger versus, and really important factor, okay? Now, looking at the Aussie USD as well, breaking lower to 69.112-ish level, capitulated to 68.91-ish level on the bottom. As you can see here, let's look at a daily chart right there, and you can see that it's just fell out of bed, okay? That previous support level that we had here on the 69.78 has been breached, and we're breaking it even further down. Now, to really take a consideration as to how much further this can go down, well, the next real support level is 68.20-ish level, so we're about 80 pips away from that. So, ultimately, if this continues this downward spiral, we could definitely see it testing those lows. Now, looking at the Canadian dollar with Poloz speaking later today, it's been very choppy. Okay, looking at the Canadian dollar here on a 4-hour chart, 134.33 is where we're trading right now. And it's just been trading between this 134.84-ish level, and it's a 40 pip move, okay? Not much to really consider, but if we do break out of anywhere above this area, 134-ish level, or 134.34-ish level, around that range, okay, you could definitely see it further correcting itself. That's why I haven't really been following it, because it's just been so choppy to actually trade. Now, jumping into the commodities. I'll first discuss oil. Oil bounced yesterday from $60, $61, $60.98-ish level up to 62. And this is why it's important to keep these support and resistance levels still there. But if you look at this chart, okay, we're looking at a 1-hour chart. Let's look at a 4-hour chart just to give us a perspective. If we look at that for a second, there we go. Okay, what you can see here is basically a basic trading range, okay? Really very simple. Now we're getting to the upper limit of this trading range. If we don't break out above this 62.85-ish level, then we could see it back down closer to this midpoint of 61.70-ish level at this Fibonacci retracement, okay? So it's really just trading between these two areas until it does break out, and that's really when I'd be looking to, jump into it a little bit more aggressively. Looking at gold, it's the same story, really. I mean, we broke above this 1290-ish level to 1300-ish level. We touched it and then sold off, okay? So ultimately, also really very choppy kind of trading, very range-bound kind of trading. Okay, you do get those elements where you do break out, just like we had right here, okay? But you can see that it doesn't follow through. Okay, it just recedes right after it hits the next threshold, which in this case was 1300. So keep that in mind, that the markets are really very choppy right now. I mean, everything is really geopolitically, driven right now based on the US and Iran, the US and China, some of the fogginess about the current recession or recessionary fears in Germany, which has been subsided. So with that said, I think we're going to be trading in a range until we do break out, either on the upside or the downside. In either case, it would just give us a little bit more directional moves. Now, jumping into that Dow Jones, I mean, this is just really crazy. Let's look at a 4-hour chart just to give you perspective. I mean, this is a great trade. Okay, this was really a layup. All right here, this downwards trend. Okay, now we're looking like we're bouncing above that downwards trend. So, ultimately this might be actually, if it does get momentum and we do, break out of this 25,699-ish level, we could see it correct itself. Okay, absolutely. I mean, we've already sold off 1,000 points. We are getting into the summer trading, so it is going to be kind of choppy. I mean, this year has been probably the most volatile trading sessions I've seen in my lifetime. Okay, in the past 25 years of watching the markets and trading the markets and participating in the markets. So with that said, I think we're going to hit a summer that's going to be kind of choppy, not a lot of volatility, but I don't like to celebrate it before we actually enter it. But that's what I expect, as we've been so choppy into this year. Now, jumping lastly into Bitcoin, which has really been the greatest one, we saw that Fibonacci retracement on 7,800-ish level, and it bounced right off of it. Okay, which is really beautiful, because ultimately I don't just put these Fibonacci levels just for my health. Okay, they're there to give us indicators, and when they work out, it's really a blessing. Okay, now looking at that, we're just trading off of it. Let's look at a weekly chart right there. Okay, I mean, you can't really see it here, but coming down to this 78.41-ish level and then bouncing off of it right now, that's actually a very positive sign. Now, the next real resistance level to break is about 8,100. Okay, this upper limit right here, where we hit quite before, okay, is really the next level to really hit. However, if we don't break above it, then we are going lower. Okay, that's not even a question. It's just a matter of when. However, this 78.41-ish level is your key indicator. So if we do break below it, that would be a indication to actually sell it. Okay, but until that happens, I think we're going to be range-bound trading. I think this is just a new range that we'll be trading in until we either go up higher, okay, or we make a correction on the downside. But at least it's giving you that indicator. At least it's, it's honoring its technical analysis in terms of giving us some indication about which way it's going to go. This is Fred Razak. I want to wish you guys a great trading day. Thank you.